Time now for all the day's business news. Cami Knight joins me here in studio. Cami, one big story today. We're staying with it. The aftershocks from Donald Trump's upending over a century of US trade policy with this big tariff announcement. How is the financial world reacting?
Well, if you listen to Donald Trump, he's saying that the rollout is going very well. But if you look at global markets, it would appear investors don't seem to agree. Let's get right into it. European stocks plummeting on Thursday. Shipping giant Maersk, which is often viewed as a barometer for world trade, shedding nearly 10%. Frankfurt's DAX and France's CAC 40 posting deeper losses, closing more than 3% lower, whilst London's FTSE only shed 1.5%. This after the UK was slapped with a 10% tariff, the lowest rate to be dished out by Trump. Now, it was an even worse picture in the US, where stocks were in free fall Thursday. The S&P and Nasdaq posting their biggest losses since 2020. The Dow Jones tumbled more than 1,600 points, while the Nasdaq fell almost 6%. It was shares of multinational companies like Nike and Apple that fell the most, tech shares also dropping. Now, Trump's imposition of heavy tariffs on a number of Asian nations like Vietnam won't just be a blow to companies who manufacture there, it's also a huge blow for Beijing, who'd been using Vietnam as a conduit to circumvent previous tariffs. China has called the announcement bullying and faces some hard choices as it weighs up how to respond. Luke Schrago has more.
Measures on China more punishing than expected from Washington. 54% in total tariffs that sparked angry reaction in Beijing.
The unilateral tariff hikes by the U.S. violate World Trade Organization rules, harm the common interests of people of all countries, and do not help solve the problems of the U.S. itself. It is clear to everyone that more and more countries are opposing the U.S.'s unilateral bullying actions, such as imposing tariffs.
Donald Trump issued an extra 34% levy on all Chinese imports, on top of the 20% announced last month. Beijing had responded to previous US moves with its own tariffs of up to 15% on certain US agricultural products, and firms there have rerouted trade in recent years through other bases of manufacturing outside China to avoid unfavorable terms for commerce. But given Trump's new tariffs on other Asian nations, including Vietnam and Cambodia, that strategy no longer looks viable.
Many manufacturers are now saying that China is no longer suitable as an export-oriented manufacturing base. Initially, Southeast Asia was seen as a promising alternative, but after this wave of tariffs, where else can they relocate? Other locations, such as Mexico, are also targeted by Trump's tariffs, so right now it seems like there's no better option.
China is now looking for alternative markets and seeking to portray itself as a more reliable partner than an unpredictable Washington for firms and nations worldwide, though none even come close to its top trading partner, the United States. Either way, Beijing indicated it was keeping lines of dialogue open with Washington, and it's been reported that President Xi Jinping could meet Donald Trump this summer in the US.
One person who wasn't present in the Rose Garden as Trump was reading out his tariff plan was Elon Musk. It was a roller coaster of a day for Musk, starting with his $20 million losing bet on the pro-Trump candidate for the Wisconsin Supreme Court. Just hours later, Tesla reported its biggest sales drop ever, falling 13% in the first quarter. And then to top things off, Politico reported that he may no longer be welcome in Washington. So was it just a bad day, or did it signal the beginning of his downfall? Well, the White House quickly called the report garbage, but did confirm he's expected to wrap up his work with DOJ by late May, when his contract as special government employee expires. But here's why him leaving Washington might be a good thing for Tesla.
As a shareholder, we don't want to see him meddling, wearing cheese things on his head in Wisconsin. It's not the right look. It's not like, we want an adult in the room to run this, right? It looks like something out of fifth grade. And some of it's comical, and I do laugh. But again, most investors would like to have an adult in the room, and that's what's missing with Tesla.
J.D. Vance told Fox News that Musk would remain an advisor and friend after his special government employee role ends. One Trump advisor telling Bloomberg, though, that the president isn't concerned about what specific title Musk holds and that it's likely he'll continue to be a frequent presence in the West Wing. Now, Bloomberg's also reporting that Trump aides are cautious not to alienate Musk because they want to keep him in the fold as a donor for the 2026 midterm elections. After all, Musk reclaimed his spot as richest man in the world this week, and that's by $100 billion. Now, after Trump released his tariff hit list on Wednesday, it wasn't long before some leaders spotted some slightly bizarre target locations. That's because it would appear that a group of barren, uninhabited volcanic islands near Antarctica have been roped into Trump's trade war. One of those is Heard Island, that you can see on those images there. It's among the most remote places on Earth, accessible only via a 2-week boat trip from Perth. The last visit from humans is believed to be nearly a decade ago. Now it's home to mostly penguins. Goodness knows what retaliation from them might look like, Sharon.
No, we're safe, Cami. Thank you so much for that. Cami Knight with the day's business news. We're staying with this topic